Hey everybody, how you guys doing? I'm doing alright. Okay, so there's something new going on. Due to the oil prices falling, due to shipping industry basically being on the verge of collapse, due to gas prices basically dropping, and long lists of everything else we can all name, gold is said to drop probably below 1,000 an ounce in about 12 months. This is coming from a good source. And I hate to tell you this, I think they're absolutely right. This involves China. We've already seen what Canada has done. They sold off half their gold reserves. So basically, it's all coming down, whether it's completely or partly, doesn't matter. And basically, this one basically says, Goldman channels FDR's nothing to fear with sell gold call. Basically, bullion's dropping below $1,000 in 12 months, banks are saying. And I'll list them because there's a bunch of sources in here which are really amazing. Goldman Sachs Group says it's time to bet against gold as bullion rally to the highest in a year isn't justified, backing the bearish call, with a comment of former leader in a report. I'm sorry, I hate this way this person wrote this. This person who wrote this is, I don't know, some kind of poet or something. Anyways, gold will slump to 1,100 an ounce in about 3 months and at 1,000 at about 12 months. Analysts including Jeffrey Currie at Max Layton, report date February 15th. Well, it's past February 15th. I haven't checked the markets to see if that's true or not. So there's a lot here, folks. Gold for intermediate delivery rose 0.4% to 1214.30 an ounce by 12:30 p.m. in London. It reached 1263 on February 11th. Goldman's target for bullion are the same as those given by the bank in a note last week when it said the U.S. rates will still increase. So I don't know how widespread this is, but basically they're saying that the gold is going to start being affected. And once the oil basically is where it is, and no doubt it's going to go down again, it's going to drive the gold, the silver, diamonds, and everything else all the way down. And that would be a good time to buy, you would think. But Bloomberg actually here is talking about a lot of stuff involving China and their manipulation of the markets, and I think it's
on China in the gold market right now. It's the biggest producer, but what might we see going forward?
Well, really, China is the driver of the biggest single source of demand, although the biggest single source of production. But if you sort of look back, there's something very significant happening in terms of China and the connection to gold. And a dozen years or so, they established the Shanghai Gold Exchange. And if you roll it forward to today, it was part of a long-term plan, as you look back, on trying to create a market. And where there was no market. Well, right. Why would they be doing that? Well, I think the reason is they look at gold as an important reserve asset. They've been consistently adding to the reserve position in total quantity, but not dramatically increasing gold as a percent of their reserves. There's something very significant going on right here in the gold space right now. For the last 3 years, it was all about COMEX, the paper market, and smart traders using the leverage and the sheer volume of that paper market to push the price. Now we're seeing, and they were doing it on the back of interest rate rises and the expectation of that. That's changed right now. Goldman Sachs was earlier this week, gold's going to go to 1,000. They've backed off that in the last few days. I think that trade's over. The trade now is that there's been no growth in the world economies with all that stimulus. There's still a tremendous amount of debt. The stock markets are cracking. We started to see it late last summer. Generalist investors who we didn't hear from in years, who had done well with Agnico in the past, are phoning us up again. They don't have to own gold stocks. So they were sensing a turn here, and we're starting to see it now.
And I mean, the turn, two big things related. One, it seems like a cracking in the confidence of central banks and their ability to do what we have thought they've been able to do and have been promising to do in terms of stimulating the markets. But also there is an actual shift in the currency landscape. There's no question. How much of a role is gold going to play in that shift?
Gold's a currency. And so once you step back from the noise of COMEX and the paper market and look at the demand in China strong, the demand in India strong, the fact that in the second half of last year, the World Gold Council was just out with new statistics, central bank demand, second strongest period ever. There are central banks around the world that want to own this stuff and want it close. So there's something fundamental going on here. If people want to own gold, they realize the importance because of financial uncertainty, because of the currency debasement. Gold does extremely well in a low interest rate environment. We're moving to negative interest rates in some places. At the same time, mine supply last quarter went down. So we're running into this unique situation where mine supply is rolling over and there's lots of physical demand coming, and the guys that were pushing gold down using COMEX do not have the Fed backing them up with that trade.
And how long might it take for some sort of cliff to happen here, where we see this all come together and there's actually a tipping point? I mean, it's happening. The price of gold is going higher, but is this something that we see rapidly continue through the year, or does that take a little while?
I think it's going to take a couple of years, but people are starting to pay attention to it now.
Okay.
And they weren't paying any attention to it because of what was happening with the sheer volumes in the paper market, and that was driving everything. Now people are stepping back and saying, hey, wait a minute, the Fed's not going to be able to raise that much. Let's look at the supply and demand flows. And the reality is people are paying attention to that right now.
How big of a role is China in?
All right, guys, let me talk to you a little bit about this because this is actually very important. The stock markets, the traders, and all the people invested thereof are starting to see that the Federal Reserve and the central banks thereof really aren't the gods that they thought they were. And so they're starting to kind of look into other markets, and they figure if they can start getting their investors and their higher investors to buy more gold, and that's exactly what they're looking to do, then their Federal Reserves and their central banks don't have to house as much, and they can actually move toward gold being a surplus again and a staple not only of the household, but of the currency system as well. We all know it's going to help, but like I said, I never really believed it was going to go straight down and that would be it. One of the best things I could ever say is that Rome was never destroyed in a day and it was not built in a day. You know, this idea that you're going to wake up one day and that's going to be it is wrong. There's always a continuation to one point or another. And it's just a matter of time before, you know, these guys lost confidence in the banks and the central banks, and that's exactly what happened. And now these big countries are starting to move away from the central banking powers because the central banks are going, well, we don't know. I mean, they're basically being froze out by higher forces. And if they're being froze out by higher forces, that means their money's being cut. And if their money's being cut, they can't do anything. Well, what do you do if your law-abiding powers can't do anything? You have to start holding things in reserve, whether it be aluminum, whether it be palladium, whether it be, you know, gold or silver or diamonds, or I heard somebody say that there was a big move. I forget what metal it was, but something you got in your house a lot of, and there was a big move to hoard. I forget what it is, titanium or something. And anyways, all this stuff is used basically as a fractional currency, and now it's becoming more and more of a, well, everybody's in the negative rate system. So how many fractional currencies and subsidy currencies do we need? Well, we need all of them. Why? Because we don't need to just rely on one anymore. The paper market's down due to that group that they said, COMEX, I believe it was, that basically has destroyed the, or at least nearly destroyed the paper money markets. So how do you really build a civilization on an electronic source? Well, first thing you have to do is you have to destroy the old ways, which usually is paper money. So COMEX is down and out and almost gone, so they're gone. We'll see them come back up and this and that. It's not going to be a total fall, but you get the idea on that. So these reserve currencies are being modeled after, and now they're being put into use, which is good. But I still think that gold is going to fall again. One of my investor buddies said that by the 2020s, they're expecting to see gold somewhere around $800 an ounce. That's why when I saw this at 1,000, I said, aha, it's actually happening. And the idea of this is not because the world is falling apart. In fact, what's actually happening is we're starting to see the control factors being taken from these billion and trillionaires who basically ran an empire that didn't have an idea of what they were actually doing with the numbers and the figures that they were actually using. I mean, they were paying $1 billion for a $30 million yacht. They were paying, their employees for lavish vacations when, half the money was never used. And so everybody's kind of stepping back now, and they're going, well, if that only costs $6 million, can I float you $5 and pay interest on the rest? Yeah, okay, well, that'll work. All right, well, would you take 3 in gold if I had, on 5? Well, what does that look like? How many ounces? Well, okay, fine. And, that's kind of the way it works. And this is what we're going to see, and I think this is what we're actually starting to see. We're seeing the power from the central banks being taken, which is what we've always said is going to happen, because they're not the scary boogeymen people they used to be. They're going to go off into the background and still run things. It's not going to be any major secret. But this is what's going on, folks. Thanks.